Hello traders, Greg here with a market update. Okay, the US and Iran situation is still a complete mess. There is a stalemate with negotiations and the path forward towards a potential deal. So look, market is starting to get a little bit nervous. Nervous that this could re-escalate back into a war situation. So the market that is the most nervous is crude oil. So crude overnight was up about 5% and back above $100. So obviously that is not good for risk or world economies. I would suggest though, if we did go back into a war scenario, that crude will not only take out 120, which has been the high so far for what has happened between US and Iran, but it will probably go straight through 120, and at some stage I would imagine it would retest the record highs for crude at 150. So that is probably a scenario that no one wants, but certainly it is a risk that cannot be ignored. Equities last night, S&P, Nasdaq, US equities, they have been ignoring what has been happening with the war situation and crude. They've gone absolutely parabolic in the last couple of weeks, record highs. Look, they did trade lower overnight. S&P down about 0.5%, Nasdaq down 1%. So yes, the crude spike back above $100 has slowed them down, but look, they're not big moves, and certainly still super close to record highs. But again, it suggests, look, if crude does obviously stay above $100 and continues higher to 110, etc., those sort of levels that will not be ignored. Gold was probably one of the markets that did pay attention to crude last night. It fell about $100, back down at the moment, trading in Asia just sub 4,600. Gold has traded like a risk asset throughout this whole war situation. And the other thing is that obviously with crude going higher and inflation going higher, bond yields going higher, and we've got central banks that are obviously getting hawkish, raising rates. These are all things that gold does not like. So no doubt if crude continues higher, I would be careful about buying any dips in gold because certainly, potentially, it could still go a lot lower. We've seen it do it before. Moving along, this is a big week for central bank meetings. We started those yesterday with the Bank of Japan. The Bank of Japan did not raise rates, so they left their policy rate at 0.75%, as expected, but it was a hawkish hold in that we had 3 Bank of Japan board members who actually did want to hike rates. We also saw them upgrade their inflation forecast. So it looks as if the June meeting for the Bank of Japan is probably going to be a done deal for them raising rates. For dollar yen though, dollar yen was trading around about 159.40 going into the Bank of Japan meeting. Opening Asia here at the moment, we're at 159.60. So even a hawkish Bank of Japan yesterday could not get the yen bid. So Japan has a serious problem still with this weak yen. Obviously, we are very close to 160 and very close to those 40-year highs in dollar yen, just around that 162 area. It's just certainly not going any lower. They import all of their crude. You've got a weak yen, huge crude prices. So obviously it is a disaster for them. At some stage though, they must be thinking about intervention. So, I'd be a little bit cautious about chasing dollar yen above 160, that's for sure. Tomorrow morning Sydney time, we get the Fed meeting. Look, there's no chance that the Fed is going to be dovish or can be dovish. one of the things is that obviously they have now seen that crude has remained elevated for a couple of months. It doesn't look like ending anytime soon. So potentially, if somewhere in that meeting and press conference, Powell opens a door that maybe they might need to raise rates at some stage, then that could be the risk tonight for the FOMC and obviously for markets as well. Today's a big day in Australia. We have not only monthly inflation data, but we also have Q1 quarterly inflation data as well. And it looks like it is going to be an absolute horror story. The CPI looks like it's going to spike up from the monthly data from 3.7% from last month, which last month was a big increase, another 1% high to 4.1%. So pushing up towards 5%. Can you believe it? And then coupled with that, we've got a RBA cash rate at the moment that's at 3.85%. So it's a good 1%, pretty much lower than where inflation is at the moment, and inflation doesn't look like obviously it's we've seen the top yet, or it's it's going to go lower or stall. So the RBA's got a huge problem. They need to raise the cash rate, even though they've already raised it twice this year already. Only central bank so far that's been raising rates. But we do have an RBA meeting next Tuesday, and it looks like we're going to get that third rate rise, take the cash rate up to 4.1%. But again, that is still a lot lower than where inflation is. So imagine the RBA can't even stop there. So huge issue for Australia and the Australian economy, that we've got an RBA that really can't stop raising rates. So even though that we've seen obviously US equities up record highs recently, have a massive rally, the ASX hasn't really followed in the last 5 days. We've actually seen it lower. So the Aussie share market's starting to obviously have concerns about exactly where this is going to take the Australian economy, and obviously it's not going to take it in a good place. But for the Aussie dollar, that is trading around 2-year highs going into this inflation number just below 72 cents, having a cash rate that keeps on climbing, interest differential blowing out with other central banks. It's tailwind for the Aussie, so I wouldn't be surprised if after we see this inflation data, we see a decent spike higher above 72 cents for the Aussie. But anyway, a lot going on in markets at the moment. Obviously, markets waiting for more headlines, what's happening with US and Iran. But at the moment, its market is certainly a little bit nervous that there is no real positivity happening. Good luck with your trades. We'll check back with you shortly.